Welcome back. Continuing to analyze the slew of business updates that were reported after market hours on Friday and over the weekend. Senco Gold was one of them. They saw their revenues grow by 28% and they also saw strong same-store sales growth led by festive demand. And to discuss more on this, Suvankar Sen, who is the MD and CEO at Senco, is joining in now. Suvankar, good morning. Thank you for joining in. You came out with a very strong update, 28% revenue growth this time around in comparison to what you have guided for in FY26, which is 18 to 19%. Does that give you conviction to up your guidance now for the full year, or would you wait for another quarter before you take that step?
I would be very confident to achieve the guidance that we have given, but to up the guidance, I would rather wait for another quarter. When we look at it, quarter one is one of those festive quarters. We have Akshay Tritiya, a lot of New Years in various states of the country, and the summer wedding season remains in the Q1 part of it. While in Q2, usually we do not have too many weddings, and the festivities are on the lower side. But the focus of Q2 remains to be such that we build up for the festive season that starts in Q3. So I would be, more confident on the 19 to 20% guidance that I have given. But our efforts and endeavor will always be towards, making sure that the numbers becomes better than what we can guide the market.
Okay, so looking to beat the guidance. Mr. Sen, morning. This is Rima here. Talk to us about diamonds. So you've indicated that the diamond volume growth was about 35%. What was the value growth in diamond, and what kind of margins on an average, on the whole, can you do in FY26? Can you do better than the 7.2%, the upper end of the 7.2% that you'd guided for?
So the diamond value growth, if we look at it, the volume growth being at 35%, the value growth has been upwards of 45%. So, it's been a good comeback by the consumers with regards to their interest on buying diamond jewelry compared to what we saw in the previous years, Q1 and Q2, where there was a higher, I would say, inclination of the consumer to buy gold jewelry. And I think that at these high gold prices, consumers are looking at buying 14 karat, 18 karat plain gold or diamond jewelry, which falls within their budget. And there has been an effort from our side to continuously come up with new designs, create jewelry which is within the affordable budget of consumers. We've launched almost 5,000, 6,000 new designs in diamond jewelry and in gold jewelry during the Q1. And I think that it's a combination of various festivities and new design development that has led to the consumers have a need of buying such products and such jewelry. And when it comes to your EBITDA estimates, I would say that yes, around 7.2 is what we have said. And we have just ended Q1. While our efforts will be, and with the higher diamond sales, if it continues to happen, there is a probability of it going up. But for now, I think it's better to have our model with a 7 to 7.2% till we move and go closer to Q3.
Okay, so Mr. Sen, you mentioned there is growing consumer demand for 14K and 18K jewelry as well, right? How is this segment with respect to margins when it comes to this particular category? And will you be seeing more launches here? And in terms of store additions as well, will you do better than the 20 number that you had told us?
So we've already launched 9 stores, and in the Q2, we intend to launch 5 to 6 more stores. And then in Q3, the remaining. So while our efforts will be to take on the number 20 and go higher, but I think that till we are closer to 20, we might as well continue to with a focus on 20, while internally we will be focusing on driving higher numbers. And these products, which is diamond, which is these lower carated jewelry, there is a probability of a higher margin. But then again, we have to look at the overall picture. So there is this effort of balancing between growth and profitability. These products will help you with your profitability, but also in the 22 karat gold jewelry segment, since there is the discounting that happens, the gold prices are at a high level. We are offering great deals to the consumers. There are a lot of schemes that are being offered every month, every quarter. So we need to balance between growth and profitability and grow in a sustainable manner.
What about your studded ratio, Suvankar? It was up around over 11% in the fourth quarter. What has it been this time around, and what do you expect to end the year with?
The studded ratio has been close to 11%, and our effort is that to take it to 11.5, 12%. And the growth that we are seeing in the diamond jewelry sales, we are optimistic that it will be upwards of 11%, closer towards 11.5 to 12, and that is largely led because of the high gold prices. So consumers, when it comes to gifting or their anniversaries, I think consumers are looking at diamond jewelry once again. And one thing is that the fall of diamonds that we were seeing over the last 1 year, I think that the prices of diamonds have come to a kind of a bottoming out, and people are now seeing that hopefully in a month or two, the prices will start moving up once again in diamonds.
So do you think you can do better than the 20 to 25% growth in diamonds that you had earlier guided for? Q1 has been extremely strong.
Ma'am, if you ask us, do we think we can do better? We can always do better and better and better. But the question here is that, wanting it, and then the external market conditions that are there, in which sometimes it's not totally in your control. But our effort will be that we should be looking at a good, strong diamond jewelry growth of above 20%.
Last question before we let you go. We know the market conditions are not in your hands, but promoter buying stake, will that continue? Because the stake has been increasing, 64.3% in March. Any more buying likely by promoters?
We'll have to, wait for the results to come out, and only after, there are these lock-in periods. But if you ask me as a promoter on the optimism and the positivity that I have towards the growth of the company, well, that remains positively strong. I can see the market opportunities are there. Yes, one has to look at very strategic way. What is the product that the consumers are looking at? What is the budget that the consumers have to buy jewelry? So as long as we are customer centric and having the right product, I'm sure that the growth for the company will continue to happen.
Just one final question. What percentage of your gold sales or jewelry sales comes from 14 and 18 carat?
The overall percentage would be around 12 to 13%.
And what was this number earlier?
The number was around 8 to 9%. So we are seeing that there is a steady trend upwards towards the 14 and 18 carat and modern designs, Western designs. That is something that we are seeing that in the 14 and 18 carat segment, it is moving up very, very strong.
And this is quarter on quarter, the change from 8-9 to 13-14?
I would say it's more of an annualized versus what we see in the quarter.
Suvankar Sen, pleasure having you as always. Thank you so much for sparing time and joining us. Look forward to having you after your quarterly results as well. The management there of Senco Gold. Strong business update, but would wait for another quarter to raise their guidance for the full year. The stock in an upper circuit of 5%. Take a short break. The markets continue to remain where they are. Absolutely no movement whatsoever. But we discuss the road ahead with Dharmesh Kant from Chola Securities on the other side. Stay tuned.